Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary Wednesday. It's October the 1st. Good morning, everyone. We're going to take a look at our markets and our trading day ahead. A lot of news here to decipher and to look through, so we appreciate you being on with us and making us part of your morning. I'll be on RFD TV this morning, 8:15 Central Time. In fact, I'll be on the rest of this week at 8:15 talking about the markets and kind of setting the table for what we can expect. I'll do the Commodity Wrap podcast with RFD, Sirius Channel Satellite Radio 147 this afternoon. And, of course, we had a lot of news yesterday and overnight. So let's get into it, talk about the overnight markets. First of all, dollar index is a little bit softer here this morning. Nat gas is firming up while crude oil turns lower, getting close to some major key technical support. Stock market is down. We had a decent day yesterday by the close, but we were down this morning in reaction to the government shutdown. And gold and silver are reacting with higher prices, surging higher. Target of $4,050. That's our targets here for gold and silver in the near term. Corn down 2 3/4. Beans off 5.5, with the wheat 5 to 6 cents weaker in the night action. So yeah, let's start talking about markets and what we're going to expect with today's trade as we turn the calendar to a new month and a new quarter, October the 1st, and that means, as we mentioned, unfortunately, a government shutdown. So as we've been mentioning, we have government shutting down, and that's unfortunate, but it is what it is. First, check of our weather. Harvest activity and some pressure should weigh on values early part of this week into the weekend, it looks like, as 6-10-day forecast has above normal temps and just limited precipitation. So it's really ideal for getting out there and getting crops harvested. We know a lot of you are really busy in doing that this time of year. We will have census crush report out at 2 o'clock today. This is not a USDA report, so it is going to be released. And the crush is expected to come in for August, 196.9 million bushels. That'd be down from July, but well above last year's levels of 167.5. That would be the largest August crush figure on record. And estimates are 191.7 to 200.8 million bushels. So this may be one of the few reports we actually get this year, this month, or until the government shutdown is averted. So officially, we shut down at midnight last night after the Senate failed to pass the funding bill. This is the first shutdown since 2018 and 19. The 2018 shutdown lasted about 35 days. The average shutdown in our history has lasted about 8 days. And essential services, defense, Social Security, air traffic control will continue. But a lot of the other services are not available, so we will not have private exports announcements. We will not have any government reports. Next week's WASD report is in jeopardy because of the government shutdown. So we have last shutdown lasted 35 days. The average is about 11. Historically, the stock market has done very well during these shutdowns. We've rallied about 11%. S&P futures have rallied during the shutdown, and who knows how long this one will continue. There will be another vote today. Senator Thune is bringing it to the floor at 10 o'clock. I think there's a press conference this morning, and at 11 there's a vote. So they will be voting on it again. Whether anything gets done, who knows? They seem to be at an impasse right at this time. So the fundamentals are bearish here for all the grain markets. And since August supply and demand report, USDA has found an extra 3.5 million planted acres of corn, which equates to about 650 million bushels. They've also found 200 million bushels of additional old crop supplies of corn. That means 850 million bushels that were a big surprise, I think, to trade and the traders, as yields are likely to come down. I think, in fact, in this upcoming report, the stage would have been set for the USDA to drop corn yields substantially, another 2 or 3 bushels per acre, if we have that report. So we may get some of these extra bushels back through the form of yield loss, but without a report, we're not going to have that news. RJ O'Brien has ending stocks at 2.506 billion bushels of corn versus 1.532 last year. Soybean ending stocks at 357 versus 317 a year ago. Wheat stocks 913 versus 858. It's hard to be bullish when your ending stocks are larger than a year ago. You can really look at each of these commodities. We're overproducing corn here in the United States. We're going to have 17, maybe 18 billion bushels of corn supplies to work through. Just too much corn to work through, and prices likely to work lower. Soybean ending stocks, without China in the marketplace, our exports are poor, and supplies are too large. And wheat, not only are our stocks larger here in the U.S. than anticipated, we also have huge world supplies of wheat that's going to keep a lid on rally attempts. Finally, cash cattle calls are steady to lower this week, but feeder calf sales have been better than expected. They were steady to $3 lower in Oklahoma City, pretty strong in Yankton yesterday. So these sale barns are not seeing sharply lower prices. I think that's why we saw a big rally in the feeder cattle futures yesterday. Good luck, good trading, everyone. As always, reach out to us, talk markets with you. This has been Brian Hoops for Midwest Market Solutions.